I'm going to talk about something a little less exciting maybe for some of you guys, and really focusing on the health benefits market. And I'm going to start with something that I stole, which is the question of whether, I'm not saying all of it, there we go, health insurance is actually relevant. I was at a conference recently and selling to great group of people that do some really good research in the space. They asked the question whether insurance is really relevant, and they used the example of the Kim Kardashian index. So everything is measured in relation to how many keyword terms, Google search terms, relative to Kim Kardashian. And it was, everyone kind of was very excited. They saw that, their auto insurance was relevant, and they were close, and the lines were coming together, and they're all high-fiving, and really happy that they're relevant. And then they tried to map that onto the Canadian experience. And so naturally they had to think about who are we going to use as our substitute for Kim Kardashian, and it had to be someone relevant and all that kind of good stuff. Naturally they chose Celine Dion, which had the effect of skewing the lines, and so insurance was, I think, much more relevant than maybe it is if we chose someone like Champagne Poppy. And so when we look at, so good news for all of you that are in the healthcare space. I'd say healthcare is narrowing. It's actually becoming almost converging with Drake. For us in insurance, I don't think it's as exciting. I just don't. But the good news is that health insurance is pretty much tied with auto insurance, which is really interesting. You think in the US you might see that. I didn't think so in Canada. But I think the takeaway here is, don't let it get to your head. None of you are as interesting as Drake. But there's enough of an interest that I think these events will continue for quite a while. So when we look at insurance and we look at really the employer market, health benefits, the question really should be not just using innovation to solve problems, but are we solving problems for employers? A lot of us as employees, think about our benefits differently than our employers do. And the types of things that employers are battling right now, 15 to 20% annual increases in their benefits costs, which is just not sustainable. And it's really calling out for other types of products like defined contribution, budgeted solutions are becoming very popular, and I really believe are going to trend favorably in the coming years. We all know about the changing demographics in the labor force, but really what employers are grappling with right now is not just younger people. We know millennials and the generation that follow will soon comprise 50% of the marketplace. We hear all these figures all the time, but there's also 4 to 5 generations in the marketplace right now. And one-size-fits-all benefits don't work anymore. And it used to be that benefits were a way to attract and retain employees. And when they're not relevant anymore, and benefits aren't personalized for each employee's experience, you have these vanilla, plans, which are 4 massages, vision, $250 every 2 years. You're not winning over anyone with those types of plans. And so there's really a lot of pressure to personalize the experiences and start offering non-traditional benefits. I spend a lot of time in the SMB market. And when you look at the demographics, you also see that young people are preferring to work at smaller companies. And that's a trend that I think is going to continue, as well as young people. We've seen a lot of movement in the labor force, but what we haven't seen or recognized enough is that people move from being, what their status is. I'm an employee today, I'm a consultant maybe next year, maybe I'm going to take a little time myself and start my own business. That journey, benefits aren't following them right now, and it's not very relevant. And so smaller companies, how do they compete for people that want to work for their companies? They have to start introducing non-traditional benefits. You have to look beyond even wellness, I'm sorry to say, even beyond fitness, but the types of things that help small companies compete. If I have a company next door that's letting me bring your dog to work and I can't do it, how do I get that employed? Do I have to offer pet care benefits? Do I have to offer child care benefits to some people? Transportation benefits. Benefits is going well beyond insurance products, and it's really moving into the range of total benefits for a company and using the strength of a small business, which is flexibility, and even non-monetary benefits to compete better, work site benefits, flexible policies. And digital first. I mean, this one actually gets me quite heated up. Digital first, it's really digital interactions that insurance has just failed, completely failed. And it's not just submitting your app, submitting your claim by mobile app. I saw on Friday one of the big companies announced they had a big press release that they're the first company in Canada to allow mobile submission of claims for health, dental, and disability. And celebrate it, like this is something amazing. I mean, convenience is great. I mean, we should all be doing it. I don't know that that's true innovation, and I don't know that we should be celebrating any victories in terms of our digital first initiatives in the insurance space. And just very quickly, that runs from bringing companies onto the system. It takes 6 to 8 weeks for a company to get health benefits. And that's because of the inefficiencies in the broker market, people not knowing, not being able to transact online. There's so many things that are really low-hanging fruit and we're just not addressing. But then you get to things like submission of claims, you get to things like adjudication, interactions to your mobile devices. Those types of things, it's really front to back that we need to improve. So we have seen some new entrants, and really, I think what we've seen the most is innovation on the distribution side, not so much on the product side yet. So on the far side there, we see people saying, how can we help advisors get more efficient? We did, I think, recently, we launched some products and we were seeing a lot of difficulty coming from our advisor base. And it occurred to us that a great number of our advisors are on IE5, which is craziness. I mean, just getting people to use an up-to-date browser to have proper experiences in the advisor channel, don't take that for granted. So there are companies sitting there trying to say, how can we help bring that group along quicker? We see at least 6, I put 3 of them up here, Zenefits type models. I don't know if you're familiar with Zenefits, but it's a really interesting story. It's some really good reading about pitfalls of a startup. But basically, this is coming into the market saying, I'm going to give away business productivity software in exchange for becoming broker of record. So you can imagine, I'm going to give you HR software, and Jim, who sold you your benefits, his commission checks are now going to come to me. And so that, people love free stuff. People like saving time. HR is a real pain. Payroll is a pain. Getting that software, and all of a sudden, all these checks being redirected to you, very high growth model. Are they, and so I have 3 of them up here. There are at least 3 more that I know of that are adopting this model in Canada. Are they really innovating the actual benefits? No, it's more on the distribution side. We all know that League, or a lot of us do, really came out with a bang, really focusing on the employee experience, having a better digital experience for employees with practitioners, and with scheduling, and with really improving the interactions with employees and making benefits more relevant. So they're basically working with products that we've had for a long time, health spending accounts, and insurance products, but they're just creating better experiences around that. Us with Honeybee, and I'm not going to spend too much time on that, but we really approached it using some similar tools, but approaching it from the perspective of the employer problems. And everything we do with Honeybee, we have very, very strong religion around making sure it's adding value to the employer and the entire value chain. So we're focused on onboarding companies easier. We're focused on defined contribution and budgeting. Budgeted solutions. We're really focused on helping employers compete better for talent and controlling costs and this migration to product evolution. So I'll do a quick talk about what that means. So today in the group benefit space, we have traditional products that don't work for everyone and usually don't work for very many people when you're talking about a group setting. Moving towards defined contribution basically means we're allowing employees to have a budgeted amount that they're going to go spend and they're going to make some decisions. And once you go there, we start reaching personalization. So not only how do I spend my healthcare dollars, for example, but can I actually start tinkering with the insurance products to make them more relevant to me, my life today? And that's where we're really struggling today, and we're spending a lot of time trying to figure out how to give those options to employees. With all of this stuff and all these decisions happening from that budgeted amount. It's not having an account and having insurance products, but the accountability rests with the employee to make decisions. We're helping them along that journey. And once you're doing that, and you have some basic products, remember group insurance is interesting because it's not medically underwritten. So it's basically healthy people subsidizing not healthy people. And so you don't have these personalized products, and you can only personalize them so much. But then we get into the world of voluntary benefits and allowing you to decide what you're going to spend your money on in terms of actual insurance products and other products that are relevant to you. And once you're spending your own money on those things, we've got to make it affordable. Why do your benefits leave you when you leave a company? If you spend all this time making your own decisions, spending your own allocated dollars, and topping up money to make a more relevant insurance experience for you based on where you are in your life cycle, you should be taking those products with you. And you should have your new employer sponsor you and sponsor your plan. And really, it's that journey that we're after with Honeybee, and we think, and we're betting, that that's where the market's going to go. And eventually, I guess the irony is you end up back with traditional products. I will eventually get to the point in time when I'm young, or I'm going to have a family, and I might decide that life insurance is now relevant for me, or protecting my income and critical illness insurance is important to me. Then I'm buying more traditional products, but I now have that dialogue with the insurance companies where they understand where I am in my life cycle, and the products are relevant for me. And really, this is the evolution that we are, I'd say, somewhere over here right now. Just starting to talk about these things, but no one's really actioning them yet. Big opportunity. So what's next? What's going to ruin everything I just said and make it all irrelevant? So I hope no one asks me a question about national pharmacare. I was hesitant to put it up here because I don't really know what that's going to do, but I know it's big, and I know it's going to impact the benefits market substantially. And for a lot of people that are in the healthcare space, I can imagine all of a sudden now shifting from the difficulties and complexities of doing business with private companies and public entities in the healthcare system, now trying to partner with the government. I can't imagine that's going to make things easier, make things more interesting, I think. Taxation of benefits. How many of you are aware of how close we were to having all of our benefits taxed with the recent budget? It was actually in the budget for years, tabled. And it was on the table, and there was no public outcry, very little fanfare about this, but we were literally, I won't say minutes away, that doesn't make sense, but very close to being taxed on our benefits. And when that happens, what's that going to do to that diagram that I showed? Is it going to drive that shift to voluntary benefits more? If you're actually paying for your own benefits, shouldn't you have a say in what you're getting, and shouldn't you be able to take those with you? And I believe this is going to happen. I think 1 and 2 are going to happen. And that's going to change some things. The last one is a little bit more high level. Basically at the top of the food chain are reinsurance companies. And what they're facing in the next 15 years or so are huge claims, life claims for baby boomers that will be passing on. And they're going to have all these claims to pay out. But the premium in Canada is not growing. There's no new money coming in the system. They are not relevant to young people. They're not marketing to young people anymore. It's very difficult for them to drive premium. One of the things we're trying to do is capture some of the billions of dollars of unwritten premium in the country by helping onboard companies quicker and young companies. But it's not growing. Yet they're going to have these huge claims. And last time I checked, this kind of stuff flows downhill. And they're going to be pushing those costs down on employees and on employers, and really adding more pressure to the system. So I don't really know how these things are going to work out, but I think they're really interesting to watch. And really an industry that hasn't changed much in the last 80 years. It's probably changed more in the last year and a half than it has in the last 30, 40 years. It's really interesting times. And that's me. So if anyone needs to reach me, and if anyone has any beach ball questions, that'll work.
Yeah, so we'll take 2 questions. If you have a question, you put your hand up.
Thank you. Just a question about the budgeting side of Honeybee. What do you think about the risk factor of people not properly budgeting when it comes to money? Is there any way that you guys are thinking of specifically tackling that? Because say I'm given a couple $1,000, and I spend a lot of it on dental, and then I realize I should have spent that on life insurance. Do you have any sort of factors that mitigate that risk?
Yeah, so we're actually, spending a lot of time in the platform thinking about the advice side of things. It's a great question, by the way. And it's probably the biggest question people ask on defined contributions, so I think you hit it right on the head. We spend a lot of time trying to think about how we can educate the employee as they're configuring their benefits, and specifically how they can work with deductibles and copay and those types of tools that help them hedge against overspending in one area or another. And so it's actually, it was interesting for me because when we built Honeybee, we started talking about these things. I remember I was working with some copywriters and I kept referring to deductibles. And finally they pulled me aside and they said, look, a lot of people don't know what deductibles are because a lot of young people don't drive anymore. And so they don't buy insurance, they don't have that experience of how it works. You're gonna have to be a lot more real about how you're explaining these things. And it really caused us actually to go back and change the design of some of our products. And so using deductibles, for example, being able to use your health account dollars to pay your deductible if you need it, but if not, use it on other things. So we're really trying to teach them that discipline of, look, use a deductible so you know that that money is somewhat reserved if you need it. If you're not using those sorts of concepts like copay, you don't learn accountability and you don't learn responsibility. Just very quickly, great example someone gave me. They said in their company, they have Friday beer days, and everyone complains about the kind of beer. And then they have Thursday pizza, and everyone's complaining about the toppings. And then they went to Salad Wednesdays, where everyone brought their own toppings. And he said it's the most successful thing they did for team building, for accountability, for everything, because everyone actually had a little bit of personalization there, and they felt a little bit of accountability, and they understood the process. I think it's actually a great way to think about things like benefits and things you're providing to your employees. If they're not valuing it, if they're not participating in it and learning about what they have and how to use it, you really run the risk of exactly what you're talking about.
Any other questions? Okay. You want a question?
How do you handle the challenge of disrupting your own business? It sounds like Honeybee is modular to everything else in the culture.
So we, I think not only us, a lot of people struggle with that in six. And so when we came up with Honeybee, one of the number one things we really wanted to do was not disrupt our own distribution, but rather try to enable our advisors and others in the industry to have a platform that they can use and design the way they want it. So there's a lot of sharing features in there. It's really designed that an advisor can go on Honeybee, start configuring part of it, maybe the insurance elements of it, and then send it to their client for them to configure the allowance accounts. I mean, an advisor isn't going to help you really understand the transit passes that you shoot in your play. You understand that a lot more than your advisor. So we made it a little bit collaborative, and we approached it like, look, everyone's trying to eat their lunch right now. Here's a tool that you can use to fight back. And this way we can help advisors become more relevant. I don't know anyone that likes to spend a lot of time with their insurance advisor. So it allows for remote sharing and video conferencing and fewer interactions and self-serve. But we really approached it like an advisor platform. So much so that we even say that for people who transact directly, some companies just don't want to deal with advisors, we understand that. We still deduct a commission and we pay it in a pool to our advisors that participate. So we really have to think through a lot of that channel conflict. But it's working out pretty well. We're actually getting a lot of uptake, notwithstanding the Internet Explorer 5 issue. Thank you.
Thank you.
Thanks.